Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now.
I'll start with some bad news and some good news from the latest job report. The first number to know this week is the bad news. 181,000. That's the total number of jobs added in the entire year of 2025, according to the latest data from the Bureau of Labor Statistics, which followed a standard annual revision updating their models to match more accurate but less timely data sources. These revisions drove home the conclusion that job growth basically stalled out in 2025 and was much worse than even the weak monthly payrolls reports were showing us. That total job growth compares to previous annual totals in the millions, confirming the trend of slowing growth that has been clear for quite some time. Now, the second number to know this week was the good news in the jobs report, 4.3%. That's the unemployment rate in January, which stepped down again from a high in November of 4.5%, bringing it back down to summer 2025 levels. Now, that's one indication that the labor market may have begun to turn the corner this winter, with some modest improvement to start the year after several straight months of weakening. These are just preliminary numbers, but coupled with what we know will be strong economic tailwinds from the huge tax cuts in last year's budget bill, the stage seems to be set for stronger economic growth this spring. Now, the third number to know right now is 1.84 points. That was the average spread, or how much higher 30-year mortgage rates were than the benchmark 10-year Treasury yield in the first week of February. That means we're now knocking at the door of a normal spread after almost 4 years of a really abnormally wide spread. This was a major culprit in the pain that homebuyers felt trying to get a mortgage. Last month, I talked about the surprise announcement that Fannie Mae and Freddie Mac would be buying mortgage-backed securities, and I think the proof is in the pudding that the news of that purchasing plan helped bring this spread down by that last 30 basis points or so just in the last month. So, where are mortgage rates now? Well, they've been hovering around 6 and an eighth all year so far, which is an improvement from this time in 2025 of at least half a point, maybe 3/4 or a whole point for most borrowers. Now, putting that all together, I think the takeaway here is that we've now seen most of the improvement to mortgage rates that we were expecting from that spread closing, which is a little bittersweet. It's great news that it happened, but now that potential avenue for rate improvement has run its course, which makes me a little less optimistic for prospects of further rate declines in the near term. That would depend instead on the overall interest rate and inflation environment, which don't really look like they're cooling down. The big increase in borrowing that the budget bill is kicking off this year that I just talked about, that would tend to push up Treasury yields. And the boost to economic growth should do the same thing as well as keeping inflation elevated. So my takeaway for anyone considering getting a mortgage is that rates have come down a lot, and there's no point waiting on the sidelines in hopes of further declines given what we can expect about the year ahead. All right, turning briefly to the housing market. We saw 913,000 active listings at the end of January, which is the most since January 2020 on the eve of the pandemic. In other words, national inventory is finally nearly back to normal. Now, that's about 10% more than this time last year, which that pace of growth, 10%, continues a consistent trend since last May of active listings growing, but at an ever slower pace. I think there's good news for everyone in that fact. Buyers will have more options to choose from this spring, and sellers don't need to worry about competing against a glut of unsold inventory. But they should be prepared to put their best foot forward when they list their home this spring, because it's always worth it to stand out from the competition. That is all for this month, and thanks as always for watching.